Welcome to Nestology. We are your hosts. I'm Jessica.
And I'm Shelley.
And today we're going to do a follow-up.
Sorry, I'm trying to be peppy, and then that sounded way too fake.
Our energy levels are low today.
A little bit low-key, yeah. Sorry. So I was trying to be extra pep.
It
cracked me up.
Why? See, it's waking you up.
Okay, good. All right, sorry, go ahead.
Home equity conversion mortgage.
Ooh, what's that?
Well, we have talked about this before, and I'll link it in the show notes, but we've had some follow-up questions, and the doorbell. We've been working, both of us, with clients who are doing this reverse mortgage, and questions have popped up. I was showing houses to a client, and the builders, when I said they were doing this mortgage, they kept asking questions, and it was cute. One of the builders, after we hung up on the phone, he texted me. He goes, "Can you re-explain that in a text message? I didn't want to admit that I didn't understand."
Oh, I know. Well, yeah, I mean, it's a product that not many people really know a lot about.
Yeah.
And, you call it the home equity conversion mortgage, which is the official name. Most people know it by reverse mortgage. Yep. I prefer to call it a HECM, basically, because reverse mortgage tends to scare people.
Yes.
Like, it has a bad reputation from the past. It's a totally different loan, and it's been revamped. Right. It's a great product, but people still remember that bad stigma.
Yeah, exactly.
So I like calling it a HECM. Because people listen.
Yes.
Home equity conversion mortgage. So what does that mean?
Well, yes. So, I mean, one of the big questions people had was they don't understand how there is no payment. So where does the payment come from?
Well, yeah. So
where does it come from?
There is no payment. But let me back up, because you were working with a client that was specifically buying a house. So there are two different ways. You can use a reverse/HECM.
True. Yes.
You can do a refinance into the reverse mortgage, right? And you can also purchase a home with a reverse mortgage.
Yes.
So two different things, right? And they're both, very, very different. But basically, the whole premise is the payment is optional. So there is a mortgage on it. Okay. So you have a mortgage. It has an interest rate, and, it's accruing interest over time. You can actually pay the interest. There's also mortgage insurance. We'll talk about that probably in a minute. But you can pay that annually if you want to keep the loan balance from growing. But there is a mortgage, but there is no payment required.
Okay. So how is it that you have no payment then? That was the question I got from a few people.
Well, that's an interesting question, because it's really, it just is.
Well, so it's because the loan balance is going in reverse. So instead of where you would normally make payments and have your loan
principal balance reduce,
your balance that's owed goes down over time. It increases. So
yes,
you're adding to the mortgage each month.
Correct, because you're not making a payment.
Because you're not making payments.
Yeah, so you can if you want, but there's none required whatsoever.
And that's great to know, too, because some people have worried about that with growing the balance too high, but you could continue to make payments.
You could.
Perfect.
But you still have to pay. So it's the principal and interest only. So remember that, because a lot of people have, the full payment, which is the PITI, the principal, interest, taxes, and insurance.
Yes.
But we're only talking about the part that's the principal and interest.
Right.
You still are required to pay your property taxes, your homeowner's insurance, and HOA dues if you have them.
So it's remembering to save up throughout the year, because a lot of people get into the habit of those things being escrowed each month, and then when that big bill comes at the end of the year, it's paid from the insurance company.
Yes.
So you do have to make sure you're budgeting.
I mean, you actually, there are ways that you can pay your property taxes and insurance with a reverse mortgage. One would be, one of the cool things that I think, one of the best options on the reverse mortgage is the line of credit option. So if you have enough equity in your house, you can get open up a line of credit. That line of credit is going to earn interest. So yes, you do have this little mortgage over here that's going to grow over time, but you also at the same time potentially have the option for a line of credit that you can pull money out for whatever purposes that you want, and it actually earns interest. So with the reverse mortgage, it's really cool because you've got 3 different options that you can do. If it's a refinance, we'll talk about a purchase, it's a little different. But with a refinance, you can get potentially a line of credit. You can get a monthly, what we call a 10-year payment made to you every single month for as long as you reside in the home. You can get some cash out at closing.
Yeah.
Right? So those are the main options. But the most popular one is going to be that line of credit.
Yeah.
Because that interest rate is always going to be 0.5% higher that you're earning than where the current interest rate is on the mortgage that's accruing interest.
Right.
Does that make sense?
That does, yeah.
So super, super cool program. But when you have a purchase situation,
right,
there's a lot of equity that's required to put down.
Yeah.
Okay. And so that is one thing that can stop some people. And we had that situation, and I totally understand that. The calculation is not quite as simple as people would think, just like it's.
That is one of my questions too, because when we do an FHA or a conventional, I can run those numbers pretty quick. Or if there's small changes, if they're like, well, hey, we are going to increase our budget by $5,000, like you can quickly run those. But each house we looked at, you had to run the numbers.
Well, I did, because, FHA, okay, minimum down 3.5%. That's easy to calculate, right? It's not based upon any other factors. With a reverse mortgage, it is based upon, oh my gosh, well, their age, where the interest rate is, the price of the home. There's all these different factors involved with it, and it is a little bit of a moving target. So it is a little bit confusing,
right,
because of that. So at different price points, different monies are going to be required.
Right.
And it's not all just super easy. And then also if the clients, if they happen to have a birthday, like in the process, like the older you get, the more equity you have access to.
Yeah.
So you don't have to bring as much.
Well, one of mine had a birthday last week, so maybe.
Oh my gosh. Well, then, okay, we can relook at it then. Maybe it'll be less now. But if their birthday was coming up soon, I usually do look at that.
Yeah.
And plug it in to see what that difference would be.
Yeah.
It's not always like $50,000 or something like that. But anyway.
Another question that we've gotten was does the bank own the house?
The bank does not own the house. It's very much like you've got a mortgage now. The bank kind of does own the house in a way.
But just like anytime you have a mortgage.
Just like anytime you have a mortgage, it's like the bank can't just come in and take your house.
Yeah.
So just keep that in mind. These are actually a non-recourse loan. And so what that means is let's say you stop making your payments and it goes into foreclosure or something, that goes against the house. It doesn't go against the person.
Yeah.
Okay, so in a normal situation, in a normal loan, if somebody walks away from their house, it goes into foreclosure, that foreclosure sits on their credit report, right?
Yeah.
And there's time frames involved when they can actually get another house. It's not the same. These are not reported on your credit report because think about it, there's no payment.
Right.
So the purpose of being on the credit report is to show timely payments, but there are no payments required in this.
Well, that was actually one of the other questions is, since you are building the debt against the property is increasing each month, what would happen if, say, mom and dad go and they buy this house and then they've passed away, the heirs find out that the debt against the house is now $350,000, but the value is $325,000. Are they going to have to make up the difference?
They do not. And that's where the mortgage insurance comes into play. So the FHA mortgage insurance that's on a reverse mortgage is very different on the reverse mortgage versus like a regular FHA.
Yeah.
On a regular FHA loan, everybody's like, oh my gosh, nobody wants mortgage insurance. I get it, but because it protects the bank. Right. So if you don't make your payment, that's when the mortgage insurance kicks in on a regular loan. So there's no payment on the reverse mortgage. The mortgage insurance is actually in place to protect the client. And so in the case where the house is actually worth less than, what they owe, FHA mortgage insurance kicks in and pays the difference.
Gotcha.
So the heirs don't have to ever pay that.
Because I know that's the concern we hear a lot from people is them worried about putting that, whether it's the actual owners worried about putting that on their children or the children worried that they're going to be taking on a problem later down the road.
Right. Right. Exactly. Because a lot of times, we get the whole family involved with these loans, financial planners, so that everybody understands, what this product is and what it does, because there's so much bad information out there and most of it's wrong.
Well, and we've had some, senior experts on to talk about, a lot of times these buyers are needing, or if they're refinancing, need help from the family. So it is good that they have kids and everybody involved. Sometimes it gets annoying when you have too many kids with their own opinions, but...
And then they all have different opinions completely, yes. But...
And then arguing over what happens to mom and dad's house, but...
I know. But, here's the thing. The majority of the time, it's like the parents are typically like, well, we want to leave the house to the kids. Well, you still can leave the house to the kids. But the kids don't normally want the house. They want the money.
It's a unique... Well, and it's, a unique situation. Sometimes, like I know my husband wants his parents' house to stay in the family. It's special property. Mm-hmm. But for the most part, we hear that. They're like, oh, but my kids... And their kids are like, no, I don't want this house.
I know. I just want the money. But regardless, you have options there.
And honestly, the money, yes, some kids worry about getting the money from it, but mom and dad need to be able to live comfortably in their years.
That's right. Do you want your mom and your dad eating like cat food and living off such a tight budget just to save up, this equity in this house to give you after they've passed away? How about they access it now and they give to you with a warm hand, and maybe they take trips with you or do things with the grandkids and do things like that that will create lasting memories.
One of the families that I'm working with that's doing this type of loan, they said that they only eat one meal a day. And they said that's what they do. But I know we know that what their income is, and they can't afford it. That's the problem. They are on such a tight budget. This is the way for them to be able to afford to put food on the table. So look at your parents and make sure that their life is going to be enjoyable, not that you're going to get the most money when they die.
Because I just don't feel like we even ask those questions. Because I remember when I found out about my mom, I didn't know what her retirement income was.
Yeah.
Right? Until, she got a reverse mortgage, and then, she's in assisted living and all that. So now we're very involved and we know all the finances, but we didn't at that time. I had no idea my mother was living off $1,600 a month.
Oh my gosh.
Now her house was paid for.
Yeah.
And so here she's sitting on this equity and living off $1,600 a month. How do you pay your property taxes? How do you pay your insurance, your HOA dues, all of that stuff, and not mention just live?
Yep.
And what about a car repair?
Yep.
Gas. all these things. It's so much. Anyway, so the reverse mortgage really helped her out in that situation because she was able to access this equity, and she used that money to do the things she needed to do. She had to fix up her house. She fixed her car. She got new windows.
Well, that's exactly what some of my clients are dealing with. And I've seen it, time and time again, where they can put $150,000, $200,000 down towards a house. So, they have a chunk of money to put down when they're buying, or like you said, their house is completely paid off, and then they're sitting here not eating.
I know. So there's options.
Yeah. But, and they may not even be able to do if they only make $1,600 a month. They normally can't qualify to buy a home.
Oh, no.
Because how are you going to get a mortgage payment that fits with DTI there? So
yeah. And we don't look at DTI on these.
Because they're not making a payment.
Because they're not making a payment. So the main thing that we do look at is have you paid your property taxes and your homeowner's insurance, HOA, if they have it on time for the last 2 years.
Yeah.
That's pretty much, it. Yes, we look at a few other things, but they're all manually underwritten, and it's to benefit the client.
Yeah.
So, and we are talking about situations specifically right now, where it's, maybe they're not in the best financial shape, but there are super, super savvy buyer.
I was just going to say that because I know we talked about that on the last episode we did in some of the creative ways, whether it's a second property, and there's just...
I don't want anybody to think that this is
only for desperate.
Yes, it's not the loan of last resort always. Definitely it can help in a lot of those situations, but it's also for the financially savvy as well.
Yeah.
Right? Somebody that's looking, to save some cash and then fund their long-term care. I've got some super wealthy clients that are buying, they want to buy $1 million house with a reverse mortgage because they don't want to spend the $1 million. And then they're going to they're going to overfund it, get a line of credit, and use that to fund their long-term care. They're brilliant.
Yes. Oh, no, that's an amazing idea. And like I said, I'm going to have the that other episode linked in the show notes. So, for people who are looking to get ideas on that, I think right now we're seeing more of this end of it because so many people with inflation, if somebody's on fixed income, Social Security.
Oh, yeah.
And we've seen our grocery bills. I mean, mine doubled last year. It's ridiculous.
Right.
Let's have 2 teenagers in the house. But for somebody on fixed income to double the cost of their groceries, then they're doing this where they're cutting back.
Yes. I'm going to say the biggest challenge that I've had over the last year with reverse mortgages that I have people that want to do it so bad, but values have dropped.
Yeah.
And there's not enough equity. And that's been the biggest hurdle that I've seen over the last year, honestly, is just that, there's not enough equity in it.
Yeah. And for any type of refinance, too, we were talking about that this morning.
We were. I was like,
so if you are one of those people, I think wait a couple months.
Yeah.
We're having trouble with appraisals right now in value because the last quarter, things really did drop. Prices dropped. Everything was very slow. But this year has already turned around. We're seeing multiple offers on houses that have been on the market for over 100 days. So I think the numbers will start to reflect that, but it's going to take another month or two before we have the stats and the closings to use for those appraisals. So.
Yeah, I know. So, yes, not just reverse mortgages, but in general, I'm dealing, with some unfortunate situations with some clients that would definitely save money with a lower interest rate, but the value has declined lower than what their loan balance is.
Everyone saw the headlines that we hit.
Oh, gosh, yeah.
Low interest rates.
That was great. I got a lot of phone calls and emails and all
but then
that.
The house is
but I'm like,
not going to appraise right now.
It's like, it's like a handful of them already. We're like, we're going to have to wait. We're going to have to wait on that.
Yeah, and I think, like I said, it's turning around with the amount of multiple offer situations that I encountered. For like a builder that I went to, she said she was putting about 2 houses. She's covering 3 neighborhoods and was putting 2 houses under contract a month between the 3 neighborhoods she was covering.
Wow.
And then this past week had 5 go under contract. And one of them was my clients. And while we were in there, we were finishing up and someone walked in the door and asked for the house that we just went under contract on. They're like, we're here to see this house.
Too
and
late.
we were just like, oh my gosh, thank goodness we got here when we did. But it definitely has picked up. Like I said, we don't have the data yet, but seeing so many of those multiple offers. So if you want to do the reverse mortgage or refinance, give it another month or two and we'll have some better numbers to help support a refinance.
Absolutely. And hopefully in the meantime, rates will just continue to drop. Wouldn't that be great?
So. Yes.
I'm like, I really want them
Keep
to
going.
Like, come on. Low fives. Wouldn't that be a dream?
Yes. But the lowest since September of 22.
Yes.
Which was amazing. So I'm just very excited to see the 6% that we're at right now.
Absolutely. So. No, it's been really nice. Really, really nice. So did you have any other questions?
I didn't.
On the reverse mortgage stuff?
If anybody does have questions, there's no stupid questions in this. Like I said, that poor builder, he was like, I'm sorry, you explained it all over the phone and I still don't get it. So
it's
Shelley
complex. It's a complex product. It really is.
And to wrap your head around the no mortgage payment, that's what they're like, but how and where does that come from? Because people know there's no such thing as a free lunch. So now hopefully you understand a little better of how it works, the whole reverse aspect of a reverse mortgage.
That's why it's called that.
But yeah, if you have questions, reach out to Shelley. I'll have
Please do.
The link for her website in the show notes too. So you can reach out to her with questions. But it is a great product, whether you are a savvy, wealthy person or you're struggling to pay your bills, either end.
Yep. And everything in between.
Exactly. Well, I'll have some info on our socials as well. I'm forgetting what we're supposed to do here. Facebook and Instagram.
Yeah, that's where we are.
Nestology Podcast.
Well, thank you all for joining us where we help you make the best of your nest.
Bye.
Bye.